Well, welcome. I believe we are live now. We got the best topic out of the whole session, traditional investments versus the future economy. And I got a great panel of people here with me. I got Evan who's an investor and an entrepreneur, Andrew from General Partners, 7VC, and Calvin from Plutus VC, who, Calvin, I know we were up late last night, so good to see you back. I know it's like 2:30 in the morning for you, and it's good to see you on here. And yeah, just I think our panel question is the best. It says you're still early, and yes, we are really early in this marathon, I would say, for where we are going with the future of crypto and everything going on. And so I'll let everybody kind of do a little bit of a small introduction. My name is Jorge. I represent Delta Core Capital. We're a digital asset hedge fund located here in Tampa, Florida. And really kind of it. Andrew, you want to go next?
Sure. I was an entrepreneur before becoming a venture capitalist. Founded a number of different companies, had a NASDAQ IPO, M&A, and even a failure. I'm currently investing out of Fund 3. We're pretty much a classic Silicon Valley venture capital firm. We invest in late stage seed companies that typically have $100,000 of MRR, monthly recurring revenue. We also invest in Series A, Series B as our first bite, and we allow our LPs to invest in the startup right up until pre-IPO exit. Our first fund is over 7x cash on cash return, and our second fund is over 12x fund wide cash on cash, and we expect to do better than that with the fund. And we're excited about being investors now. And I think digitizing everything is super exciting, not least of which crypto.
Thank you. Calvin?
Hey, hi everyone. Somehow something is wrong with my camera, but anyway, it's 2:30 now in the morning here in Singapore. So I'm a general partner for Plutus VC. We are a 200 million US venture fund based in Hong Kong. We invest. Before that, we were in the TMT sector, telecommunication, mobile, and technology, only investing in China market. But then in 2016, we moved a small part of our fund, about 20 million, and move it into the cryptocurrency market. And today we split up into two different funds of 200 million. The blockchain fund is having an AUM of about 400 over million US, depending on the price of Bitcoin. It was like maybe 3+ weeks ago, above 600 million. So we just lost about 200 million in AUM. Okay? And that's how the cryptocurrency market is. So we invest every year more than 50 projects or companies, 80 to 90%, mainly in tokens, basically. That's about it.
Thank you, Calvin. Evan? Can you hear us, Evan? I think you're on mute.
Oh, sorry, guys. I didn't say I was on mute. Hey, great to connect. Pleasure to be here, guys, today. Sorry also about not having the camera set up in advance. I didn't know that was the case. Yeah, I mean, a little background. Been investing a lot in technology, early stage companies since I was pretty young. Sold my first startup at 17, made a couple million, understood technology well. So investing back in technology, was an early investor in Ease.com, fastest growing company in the US in 2016. Well, I thought I was pretty good at it. It was my first investment. Did about 100+ equity investments, mostly in seed, pre-seed startups. I got into crypto and bought my first Bitcoin in 2014, but didn't really get involved heavily until 2016, 2017, when we started investing in a lot of different projects in the crypto space. And like everybody else, realized this is a much better place to put your investments in, far more liquidity, better ROIs, and also just the smartest people in the world. I mean, I like investing in crypto because you get to work and talk to the smartest people I've come across in any other industry. In the last 8 months, invested in about 300 different crypto projects, advised about 20 of them personally, been involved on most very different stages of advising companies, from helping them go to market. Also have my own incubator with about 200 engineers who work full time. Happy can add a lot of technical value. Have about 2 million followers on Instagram that follow my advice. I write for Cointelegraph, write for Forbes. Uh, Even before 2021 and before this bull, and already by 2018, I'd already spoken at over 100 different blockchain events live in person in 25 different countries, not online like this. But yeah, so that's a small background. Do a lot of different stuff in the crypto space and try to support as many companies as I can. And it's been just really, really, really great. I don't take outside capital, so don't invest anybody else's money. It's all purely my own money, and I take the highest kinds of risks. But it's led to some very massive deals, and can't wait to do some more in the metaverse space.
It's great to hear, and I think what I had heard the common theme across all of us is that yes, I guess we're still all early in this race, and I'll kind of turn over to Andrew. I know I know you and I exchanged emails, and I saw that you had asked, what are the key technologies that you believe are the biggest impact for this industry?
Well, I think, even branching out of just, DLT and crypto is just automating human workflows. So I think that right now, I believe we're living in the Stone Age today and how things are done. And crypto is pretty obvious. But generally, I think there's an opportunity for entrepreneurs to start new companies that begin to automate and digitize human workflows. So if you are a group in India doing back-end fund administration for a VC fund like mine in Silicon Valley, it's time to maybe automate some of that activity and write software to do that. And so I think that is a colossal opportunity. Another one is I think the book or the movie Moneyball makes it very obvious, where there's like a baseball team of how they were finding their talent, and they started using this formulaic algorithm of saying these are 5 statistics we're going to keep track of. Well, imagine you're doing that for soccer, and you've got video of every soccer game happening in all of Latin America, and you have like CCP surveillance or autonomous self-driving car stuff getting like 1,000 points of data on every player everywhere continually. Imagine the team you could build there. You would just win everything. You'd be winning the World Cup. Whereas if you look at credit cards or finance or mortgages or the US real estate market, I think there's kind of endless data and automate human workflows. And you see that happening in a lot of crypto, blockchain related projects, but we're more broadly interested in what that means for all business, every industry, society, education, healthcare, kind of everything.
That's great. And yeah, I agree completely. Calvin, I guess I'll ask you a question as well. I know that prior to 2014 or 2016, I believe you said your fund was very little into crypto. Then you went into crypto, and now it's a good 40% of your portfolio. And so, aligns with the conversation of traditional investments in the future economy. What's your thoughts for somebody who kind of outgrew a portfolio really in this?
Well, initially back in 2016, when we were looking into cryptocurrency investment, at that time, I wasn't so sure about Bitcoin investment and so on. But then the market proved me wrong. In 2017, we made more than 380 million in net. So I was totally blown away. This is a crazy market. And then at the end of the day, today, I don't think so. In this year alone, I didn't do any TMT investment at all. I practically left that to my partners to take care of it. And I'm just looking full time into crypto. The main difference between our traditional investment and this future crypto investment is that traditional investment, we need to wait a minimum of 5 to 8 years. The longest I've waited for an exit was about 11 years. Mm-hmm. But at least in 11 years, they went IPO, right? Rather than they die off from the market. But in crypto, you get back this almost the same returns of 10 plus X and so on, like within a year to 18 months. That's how long you look at it. But of course, not every token is like that. tokens like EOS, we waited almost like 3.5 years before we exited. Okay, Polkadot, another 3 years before we exited. So all in all, I think that the crypto market is definitely more exciting than our traditional investment for sure. But we're still doing that, and we believe that one day the crypto investment will have a cross bridge over to the traditional investment sector as well.
Well, Calvin, can I maybe make this more of a discussion too? I think that in the classic venture capital world, the private and secondary markets have evolved enormously. So back in the ancient times of the 1990s, it was considered a negative signal if Bill Gates sells his Microsoft shares before the IPO. And the VCs had this attitude of, hey, I've got my management fee, I'm diversified, I'm rich, and you've got all your eggs in one basket, and I want you to have all your eggs in one basket and never sell any of your founder stock before the definitive liquidity of IPO, the M&A of that single startup. And then we had the dot-com crash in 01. We had Sarbanes-Oxley, stay private forever. It's too expensive to IPO. The big bulge bracket banks wouldn't allow anyone to go public, which is creating the need for the whole crypto world, you could say. And yeah, you're absolutely right. That's the voice of experience, Calvin speaking, saying, for the really big hits, it's a very long wait. It takes 8-9 years, then an IPO, another 4 months, then a lockup of 6 months or worse. It takes forever. But the big seismic shift is that in the non-crypto VC world, the funds got supersized. No one's getting the percentage ownership in each funding round they want. Anyone willing to sell, from founders to early stage investors, is a welcome sight. But every VC feels like you're kicking yourself in the nuts to sell early, just when Tiger Global is putting in $100 million into a company that we funded at $8 million. So what we're doing is we're now selling 5% to 25% of what we own in these companies that take forever to an SPV, a special purpose vehicle, with our own LPs. So we could take a normal LP and get them all their money back within 1 year, sort of 12 to 24 months. And now they've got a zero cost investment. And our other LPs feel like, hey, I'm getting into a pre-IPO deal direct on the cap table. So anyway, I just wanted to throw it out there. I couldn't agree with you more. Making a 15x cash on cash return in a VC fund is great, but how old are you going to be when you get that money and you can enjoy it? Whereas crypto looks like a get rich quick thing, which sadly is attracting some horrible entrepreneurs that are just total grifters, and it's annoying to work with them as opposed to the long-term company building thing. But I could go on and on, but I do think that publicly traded markets, if you're Gordon Gekko doing insider trading, I think he goes to prison in the movie Wall Street.
Yes.
Whereas in venture capital, we've formalized insider trading, legalized it, and it's encouraged. I have information rights, a pro rata equity right. I can invest in 50 companies, and they have to tell me before they raise money and let me invest in the winner. And go ahead. I'll stop.
So it's okay. So I think that what you have did with the traditional investment, such a mechanic is really interesting. It can attract back more investors into that and so on. As far as the crypto market is concerned, what you have mentioned is also the truth, that insider trading is definitely welcome and liked by all investors and so on. But this is also a problem in the crypto market. So it's a two-edged sword. Is good and is bad, sometimes. And founders can just take advantage, and the retail investors takes the hit.
Yeah.
I mean,
I think it's good to find a crypto project that is generating value, one that generates revenue and has customers that pay money for service.
I mean, I have to just to jump in here and say about a few points you guys raised. I mean, I did a lot of equity investments, and I still do them. I still do them quite a bit. But at end of the day, right now, crypto makes just way more sense. But at the same time, I think what we all need to realize is, like equity, like private equity, like pre-IPO deals, you need to have a certain network to get access to the best deals. In crypto, it's even far more true. The best guys get access to the best deals, and because there are no regulations, there are upsides and there are downsides. Upsides being you could be an influencer and walk into a deal. I walked into multiple deals, not in the last 6 months, a day before listing, put money into the deal. They refunded somebody else who was supporting the company for maybe 12 months, give me the allocation, and then tomorrow the project leaks at 100x. This is a real world scenario, and this is a product with this is a company with no product as of now. Because if you already had a product and you already had revenue, you couldn't sell the 100x version, right?
Yeah.
So the crypto market, and especially coming to the insider trading part, I run WhatsApp group. So like I said, I invest in about 300 different private sales and SAFs of different crypto projects. I run a WhatsApp group with about 100 plus CEOs of these projects, and then a few of my network, a few whales, and a few experts, and a few big fund managers. And because the price of the crypto markets never stop. It's 365 days, 7 days a year, 24 hours a year, right? So it never stops. So and the CEOs can share information about their projects in this group before, and everybody else can take action. So let's say the CEO knows that the project is going to list tomorrow in a big exchange is going to bring in multiple millions in volumes. You know, that's a guaranteed pump. So you go in and you put a trade in before they announce it to the public. So this is fully legal in crypto. There's not this is what we call insider trading in the public markets, but this is fully legal in crypto. So there's a lot of benefits uh, investing in the crypto markets over traditional investments, and I think it's you can't even just match it. The only downside I see to investing in crypto versus public markets, and this also is not really a downside, is that the amount of capital you can deploy. Right, in crypto, you can move markets if you have a large enough capital or capital fund. If you are investing hundreds of millions, you can pretty much move any coin out of the top 100 market cap coins. This would not be possible in public markets. So if your goal is to deploy 5 million and turn that into 100 million, nothing comes close to crypto. But if you have to start with 100 million and deploy 100 million, then it becomes exponentially harder to start investing in crypto.
Well, I couldn't agree more. We started with just 20 million, and today we are holding 400 over million.
And it's great to hear these conversations, and I'll scale it back a little bit since we have a hedge fund here, which really works more with retail consumers. And so, as I hear all of these great conversations, I think again to the question of the traditional investments and the future of the economy. The things that we're dealing with on our end a lot right now is the education piece of what crypto is, and all these things like Evan and Calvin, you guys mentioned, these great 100x and all that stuff. Unfortunately, also paints the wrong picture to a lot of retail customers of what crypto is. And so I think one thing that I think in the crypto world we have done horribly has been educating the outside community of the crypto world, and even as far as to say in the government here in the United States. I think we've done a horrible job of educating them as well, as everybody's kind of in the attack mode to what we're doing here in the crypto community. And so while I think it's great to hear Evan and Calvin all these great successes, I think one thing that we do have to figure out how to do is just a simple education piece of what exactly the crypto community is doing.
Which, by the way, I don't know if you can see this, but I wrote this book. I mean, Tim Draper did the forward, but I interviewed like over 100 people, like Vitalik Buterin and a ton of people, where we actually explain what Bitcoin is and exactly how it works, and then we explain exactly what Ethereum is, and then what that means for elections or people lying and programmatic compliance and how to make sure you get paid and everything. And I kind of go slowly through it. And I find it interesting that you see these people super excited about blockchain and probably could not explain how Ethereum works or how Bitcoin works or anything. I think on the VC side, in Silicon Valley, I think a lot of VCs have not made the education of time that it takes to understand what's going on here. It's like, making the investment of becoming a good golfer right now when you have a workaholic. It's like, I don't even want to do that. And I think a lot of people, they go out to a crypto dinner and they hear people talking. They're like, hey man, I speak French and German, but I don't speak that. And so as investors, they're uncomfortable, even looking at the deal flow. And then often these projects are seeking to raise like enough money for the next 10 milestones all up front. So it's like if you had biotech, no one's going to fund phase 2 clinical trials if you don't get through the clinic with phase 1 with good efficacy, or fund you for phase 1, 2, 3, and then FDA all at once. And I think a lot of the crypto projects are seeking to raise that capital up front at very big valuations, where they say, don't worry if my Bunsen burner science experiment works or not. You're going to get liquid to some dumb retail investor long before we find out if the thesis for this startup even works. And so that kind of breeds, to me, some bad behavior. I don't want to sound negative. I just don't want to pretend that this isn't happening.
No,
Yeah,
this is definitely happening. This is definitely happening, and this is something that we always debated over the last 4 years of investing in cryptocurrencies, right? So we always debate in-house, like, hey, should we fund these founders, these entrepreneurs, and so on? Because we don't believe, coming from traditional investment, we do due diligence onto the company, the founders, the team, their setup, their viability of their business model, where they are, do they have the DNA, do they have the know-how and everything. But investing in crypto, all this does not matter at all, right? All this does not matter at all. And the funny part is that when we talk about education now, Plutus sponsors a lot of KOLs to make videos and so on. In fact, we gave money to a company called Blocks Academy to come out with videos for the third world countries such as Vietnam, Cambodia, Indonesia, Thailand, Philippines, to educate people not about what blockchain is or how Ethereum works, because you have too much of that outside there. But we educate them how to avoid scams.
Yeah.
How to look at things that is being fully manipulated. We want to do something back for the market with the money that we have earned from this particular industry. This is what we're trying to do. But we found out something that is so funny, is that everyone just wants to hear which will moon, which token will pump. That's what they want to know. They don't want to know how to see a scam or what is really happening in the market. Please, all our fans who follow the education things, that just want, hey, can you like do daily what is mooning, what will moon? That's it.
I think
Yeah.
it's interesting, but if you're just looking purely from a perspective of an investor, right? And this is, I think, an investor-focused conference here. So I mean, purely from a perspective of generating returns, right? I think this is what it is. I mean, you can't have these kinds of returns if the returns are actually based on real value. I mean, that's the same with Tesla, right? It's valued far more. That's a publicly listed company. It's valued far more than all the other Lamborghini, Bugatti, BMW, all these other car companies combined. Tesla has a higher valuation because it's got the community behind it, and I think the community is what matters most, right? I mean, my WhatsApp group is called Diamond Hands because the crypto Diamond Hands means you never sell, right? You hold the stock forever. That's why it keeps going up. And my best performing projects this year was Blocktopia, which
Oh,
went for
incredible!
1,000x.
1,500x.
Yeah, I got in the private. The seed guys are 1,500. I am at 1,000x. I think that's already the best. It's amazing returns. I put in $15,000. I get paid $500,000 every month, and
Okay, you definitely got more than me. I managed to only squeeze out 5,000.
So I mean, putting in 10K and literally realizing 500,000 every month for 3 months in a row. Fourth month, this is already the fourth month already realized, and it's going to come for the next month. This is a product. This is a product that probably will never be able to deliver the vision that they're selling. I know that because I'm investing in equity in a lot of VR companies, and I've actually done so much due diligence
Oh, they
in the
won't. They
VR
won't.
space.
Blocktopia will never be able to deliver the vision that they want to develop.
Yeah,
No,
but exactly
that's why they are pivoting into
a launch pad.
marketing company to
Yeah,
help other projects to use their community.
exactly. So I know this now because I invested in VR in a lot of different tech, and I've been investing in VR since 2016, equity before the whole metaverse hype. And the demo that they show on their website, you need 150 GB hard disk and an RTX very hard graphic processor just to even do half as good. So you're never gonna have that vision, right? But I think that's the whole reason why they're able to maintain this 1000x plus with 100 million daily volume and they distribute over 100 million in profits to investors every single month. Because if they were actually going to deliver that, people wouldn't be so excited. They wouldn't think this is 1000x. Most retail guys don't put in the effort to do even a little bit of due diligence. They just want to see a few logos, a few influencers, a few VC funds backing the project. They think that VC fund did all the due diligence. But that's not true because the VC fund is buying the stock at 1/20th of the public and they're already making the money by liquidating it to the public. So the public is their liquidity. So I think that's the issue that we see in the market. But as an investor myself, I'm not gonna say that I'm not happy by making this 1000x. My second best project was CryoWar, which is 250x. I'm very happy with these results, even though as an investor in a lot of hard companies, where I know the founders work day and night, and they have no valuations compared to these crypto companies, which are basically a white paper and a vision. I would still invest in a Blocktopia and CryoWar than those investors, those companies where they're really building strong tech, but you're not going to see that ROI for a long time.
Yes.
And Evan, correct. I mean, you can't say as an investor that everything you're saying is right. I mean, it's awesome. It's great to hear. But I think, with the reference again to what's the future economy, I mean, I think you have to be able to say, and what keeps you up at night, knowing where we're going to go in the next 3 to 5 years. Especially, with the lack of, I guess you could say, lack of education to a lot of the other communities that I think at the end of the day, we're going to end up needing a different and an influx of cash from somewhere else besides our own community.
No, that's true. But I mean, I think what's going to happen is so look at Blocktopia, right? I got into Blocktopia. I tell people about Blocktopia. This is what's happening right now. People listening to this are gonna like, if he made 1000x, let me go and try and make a 10x, right? And that's what happens. You get all these new people coming into crypto. Majority of them will end up in a profit and a higher profit than they would have made in any sort of public market, right? People. So I meet a lot of investors generally outside of crypto, and they tell me, "Oh, I'm happy with a 25% or 50% a year." I'm like, I don't even care. I don't. I start my zero is 50%. So I start counting my returns after 50%. Under that, I don't even care because that was a waste of my time to even talk to that company. Because at the end of the day, we have to add a lot of value. So you have to also remember, in terms of we can do this and we can get into these deals because we bring a lot of value to these companies from day one. It's so invest. When I used to invest in equity, companies used to wine and dine me and they would pitch me all day. And I would decide, okay, I'm going to pick this out of 10, 20 companies to invest in, right? And this still happens with my incubator where we receive like 100 pitches a week and we pick one company every 3 weeks to invest in, right? But in crypto, the tables have turned, right? I have to go and pitch to companies like Blocktopia and try to fight my way in to get like 10K allocation. But I know it's a guaranteed 10x. Worst case, best case scenario, I'm going to make 100x, right? Or more. So it's the whole model is very, very different when it comes to investing. And same with the new metaverse hype. Everybody knows that the metaverse companies are going to grow because everybody sees that as the new world order and the future economy. We all know that it's going to be the future. But if you want to get early into these companies, you just can't say it because capital is cheap in crypto. Everybody's rich. Everybody's made a lot of money, and it's so easy to grow your money in crypto that you have to really go in with a lot of value add to even be able to invest in these companies. And it's not, it's you have to pitch yourself. That's the way I see it, at least with the good companies. You got to pitch yourself to get allocation.
Well, Evan, I would say that for anyone listening to this, in the highly sought after deals in the classic venture capital world, it is exactly that a VC must demonstrate what value they bring, and you've got to have a reputation that it's I mean, startups actually do not want to raise money at a higher valuation than they should, because they want to make sure that they're going to raise another round that's got to be an up round and not a down round. So what ends up happening is that there's a lot more demand for the finite supply of inventory of equity that's being sold. And so you absolutely need to prove yourself to get the deal flow, but then into the deal. Every time we wire and DocuSign a deal, and we did one yesterday, I'm like, I know that I'm in now. Now I know I'm in. Until like that second that the DocuSigns happen and the wire goes off, some Ashton Kutcher can show up and start pushing you out of the way and try and get into that deal. So I would say it's no different for the highly sought after one.
But I think I can agree there with you also. Like, obviously, the highly sought after deals are generally very, very hard. But in crypto, it's not even about the highly sought after. It's basically any deal, any good deal. You have to have a lot of value add to, or need to know
it's your
somebody.
Telegram, it's your Twitter followers. I mean, how many people do you have that follow your lead? That follow you on social?
I have 2 million followers. That's my bot.
2 million, right?
Yeah.
So I mean, in a pump and dump world, that's value.
But even generally, even not just that, like a lot of companies I invest in, I don't even offer the Instagram promotion. I usually limit that to just the companies where I have advisory shares on top. So mostly it's just a network and introductions or access to other people, other exchanges who can list to you and get you the volume. But I mean, it's like the point is it's like it's very hard to get into any deal in crypto because unlike equity, most crypto deals are also not raising too much before listing. So in equity, you have multiple rounds and you raise massive amounts of money pre-listing before you even go to the public. In crypto, you generally only raise one round and then you list. And what we've seen in recent times, in 2017, companies were raising tens of millions of dollars overnight. Now, companies raise very little money. And the less you raise...
now it's back to tens of millions again.
It's coming back. I agree. I'm seeing that the cycle's coming back. At least what we saw in the last few months, though, was the more lower market cap you have, the more hyped you're going to, the more higher multiple you're going to be able to deliver. So what we saw was, but yeah, now we are actually coming back to bigger rounds, which probably is this indication to that we're on top of the bull cycle. So because now there's everybody's made so much money.
Once you hear people starting to raise 50 million, 80 million, yes, that's when I doubt so that they will pump too high.
The other good thing, guys, in advantage of the equity markets versus the crypto markets, even though there are so many benefits of being unregulated, the one downside is that you can get your allocation canceled even after the SAFT is signed, even after the DocuSign is completed. You send the money, you have received 3 dividends, you've already received 3 distributions. You can selectively get your SAFT canceled, which has happened to me multiple times. I've literally had money stolen from in my pockets, where I have an agreement, I've received certain tokens, and they're like, oh, you're not promoting, or you're not giving us enough value, you're going to cancel your agreement. And there's nothing you can do. So
and they just shoot you back, the money. That's it.
Yeah, they send you back your initial investment. Here's your money. And yeah, we're not going to send you any more tokens. We're going to keep all the 100x for ourselves. So that has happened. That happens more than what most people would think. So even though there is a lot of 1000x and 100x's in the space, you can get them taken away from you as easily as they come. So, which is not so easy to do in the public markets, where there's regulation. Nobody can just take your shares from you. And if you have sent somebody an investment, they have to deliver the shares. So that's probably one another thing in the benefit for the traditional markets.
Yep. So we got about like less than 5 minutes to go, and I figured since we've all got great speakers here, I figured why don't we do maybe like a quick 30-second commercial on each other, how we could follow each other, how the audience could follow you, what's the best way to contact you, especially, I mean, Evan, it seems like you have a great following and you're doing some exciting stuff in this space. So by all means, you want to kick it off and tell us what's the best way to follow you on social media and how to contact you for any potential, projects to invest in.
Yeah, I mean, for me, it's pretty easy, guys. I mean, you can reach out to me on evan@evanluthra.com. Email is usually the best. apart from that, I mean, I'm also available on Instagram at Evan Luthra. So these are the two best to reach out to me, and happy to help. I'll drop my socials also in the group chat here.
Andrew?
Yeah, easiest way to get a hold of me is Andrew at 7bc.vc. Originally, the BC stood for blockchain. So it's Andrew at number 7bc.vc. And we are raising capital for a third fund right now for very small investors. We have something on AngelList that co-invests with our main fund, and for other investors can come directly into ours. I also, if you want to learn about blockchain, not just when to pump and dump, I wrote a cool book on it with a lot of interviews. You can find my Andrew Romans on Amazon, and
Why don't you drop the link in the chat if you can?
Okay, I'll try and do that right now.
Okay, Calvin.
Okay, best way to reach out to me is Calvin, CALVIN at Plutus, PLUTUS.VC. That will be my email. And we invest in a lot of projects, more than 50 projects a year easily, and welcome all projects to approach us. And also funds, we invested in fund of funds in a few, one like Dragonfly Capital in Silicon Valley. We are one of their, I would say, top 3 LPs with them as well. Thanks.
Thank you, Calvin. And I know I stayed up with you late last night as I'm trying to, I'm advising on a token and on a gaming. And then I know Calvin's been great to pick at his brain at. So by all means, reach out to Calvin for any of that stuff as well. Jorge with Delta Core Capital. It's Jorge at deltacorecapital.com, my email address. I'm really active on social media, Instagram, LinkedIn, Facebook. So you can find me. I'll drop my links in the chat. And if anybody wants to just talk crypto, gaming, NFTs, by all means, well, you'll find me on social media. So thank you, guys. Thank you, everybody, for the panel. I appreciate everybody. Looks like we had probably the best talking. So I think we might win an award. I don't know. We'll ask Michael Ward if we won the award. But thank you again.
Hey, guys. Thank you.
Happy holidays, everybody.